Did we already see the lowest interest rates for all of 2026? Or is today's data and the market's reaction and the need to just make a profit simply just a bump in the road? And what we saw today was the start of the labor data. We had ADP come out. It was just slightly better than anticipated. I don't really think it had any impact on the market. The other thing that we saw, ISM manufacturing, one of those numbers actually came in much greater than anticipated, but one of the factors of that data came in indicating that inflation for over year to year is actually pulling back. So that was a refreshing sign. I think what we really saw today is pent up demand by the market, thinking that it might be slightly oversold regardless of the conflict. It looked like traders were sent to chase some profits and to just push interest rates up. We actually finished the day almost near 4.1% once again in that 10-year Treasury. That is escalating interest rates. We're now creeping up into the low sixes. We do have initial jobless claims tomorrow. And then, of course, we got the big daddy on Friday with non-farm payrolls. So what do I anticipate for the remainder of the week? I think geopolitics will play into it heavily, especially as we head into the weekend. No traders really want to be caught short over the weekend. So I think you'll see some posturing from traders as we head into the weekend to be cautious, maybe move into cash, unless we get data that clearly indicates, especially the revisions, that that labor market's doing a lot worse than we thought. I think there's more potential to the upside for interest rates to continue to escalate a little bit here than for them to decrease. So we always finish the show with float or lock, but before we do so, who the hell am I? Well, my name is Kevin Weedmark, aka the Mortgage Mouth. Every day I come to you with a daily dose, so make sure you hit that subscription button. I never want you to miss a beat. And what we simply cover is what happened today, how it affected interest rates, what I anticipate for the remainder of the week based on data, geopolitical events, or anything with regards to interest rates, and should we float or lock. And I've been in that camp of lock. But I would say right now, unless you have a purchase coming, you have a deadline, and you have to lock, I would be in a float stance. Be cautious, but I guess if I had some time, we're back up to 4.1. We were all the way down to 3.95. We've had a big swing this week. Why don't I float this out? Let me see if I can get a little bit of that back. So I'll be coming to you again tomorrow with another episode. If you have any questions, I lend in all 50 states will love an opportunity to earn your business. Once again, make sure you hit that subscription button. Thank you so much for tuning in. Be coming to you tomorrow with another episode. Cheers.